Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Wednesday, the 25th of February 2015. 3 days left in February already. After that, 1/6 of the year is already behind us. Wow. All right, here's a look at the ES front month future daily contract. And you'll notice that we crept up a little bit today and we closed right at the risk line from the 13 seeker sell signal that we got just over a week ago. So this is it. This is the point that matters. You continue to go higher from here. You actually might accelerate breaking that risk line to the upside, believe it or not. Otherwise, if we fail, this is the area to fail at because this is the threshold on that sell signal. Now, keep in mind, what's the main thing we've had a problem with here? Volume has been a problem ever since the sell signal, almost exactly since the sell signal. We've been dealing with volume issues. So let's take a look at what that looks like. Here's a look at the NASDAQ volume number. It was up just a bit today on Tuesday, 1.7 billion shares, but still nowhere near what we like to see this time of year. We prefer to be up in the 1.9 plus range. But the market essentially stalled out once we got that signal. Been very hesitant to do much. And it seems like, if anything, we're just drifting higher due to a lack of selling. Here's a look at the NASDAQ side. So the S&P gained 5 points today. The NASDAQ 100 gained 1. There's a new closing high on the NASDAQ. Here's a look at the SOX, the semiconductor index. This shot up 9 points and got a new closing high, breaking a risk level there from that less definitive sell signal that it got. And here's the biotech index down 28. It was a good morning for us. We had some good scalps early. Nothing really played out after that just because the volume was so late. And we were pretty flat most of the day until late, as you'll see. But it was still a good trading session for us. Here's a look at Google. Recovered some, up 3 points. Apple, on the other hand, was back down a point, so the two of them switched versus where we were the other day. Here's a look at the VIX. New lows for the year and new lows for even most of the last half of December now at 1369. Which is positive for the market if it continues. And oil down again at 49.10, down 35 more cents from where it was just the other day. So not much of a bounce in oil off of that low that we saw. And here's a look at oil. Gold also down. And one more look at the trend, which is the moving average on the trend has bounced. But again, we did have that 0.85 reading, which is a negative reading last week. All right, let's go to the 5-minute chart and see what the market actually did this week. Or sorry, on Tuesday. Again, a very flat opening. First hour, we did some shakiness back and forth on Yellen's initial comments, and the consumer confidence number came out, shook the market around a bit, and then we popped up over lunch, came back down under the VWAP area to where we started over lunch, and then drifted higher the rest of the day. Some of the bars were very, very narrow, and just like they have been the last couple of days. Here's a look at the NASDAQ side, which was even less interesting, as I said. It actually gapped down, moved up to fill the gap, rolled over lunch all the way back to the start of the day, and then rallied back up. You'll notice the green line was a static trend line at the top there, and that's where we stopped for the session on the rally up. All right, so what does that lead us to tomorrow? Obviously hard to say since we're not seeing the volume. We're not seeing any definitive action at all here in the market. We have Yellen continuing to speak. We've got some minor data points, including the new home sales number 30 minutes in, and crude oil inventories behind that. On Thursday, we have a lot more data. We've got the weekly initial and continuing jobless claims number. We've got CPI. That can be a big one. Durable orders, natty gas, and more. And on Friday, we got the GDP second look, Chicago PMI, Michigan sentiment, pending home sales. So there's much more data to come Thursday and Friday than anything we've seen Monday, Tuesday, or Wednesday this week. Maybe that will get some excitement going on Thursday in particular. Friday, I wouldn't think so because it's a Friday, and B, it's the last day of the month, so they tend to have stocks pegged to where they want them. And it's also possible that they're holding the market up so that they can get this statement print. It's not an end of quarter statement. And the other thing that's probably affecting the market here is the Fed basically suggesting that rates might stay this low for quite a while. Doesn't really hurt the market from that perspective, but obviously it's hard to see where the money is going to come from to push the market higher at this point. All right, we'd love to see a pullback and have this sell signal kick into place. I think that would be the better trading opportunity for all of us. And then we could rally again in a month or two. But the market does what the market does. We'll be in the lab helping you out. Charts as usual by eSignal. Have a great trading session.